Welcome back. I'm Pratap here. Today is 17th April 2024. In this video, let us have a detailed analysis on Nifty 50, starting from monthly time frame until 5 minutes time frame. Let us analyze different levels, support and resistance levels based on NeoStock software supply demand zone chain. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. I kept the videos in a playlist supply demand zone price action course. I have provided the link to this playlist in this YouTube video description, and if you click the link you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in the channel. Now let's get into the analysis of Nifty 50 based on NeoStock software supply demand zone chain. So let's start our analysis with the monthly time frame. So in the monthly we have a leg-in candle, a medium size candle, and then we have base candles. This is a leg candle, but again it comes part of the base, and we have a very good leg out candle. So this is the way we can draw the monthly zone. Let me change the color. So this is the monthly demand zone. This monthly demand zone is having monthly EMA confluence. This is what you should observe. And currently there is a price overextension comparing from this monthly EMA. If this overextension has to be completed, the prices should come up to here. But do the prices come up to here? That is all depending on the lower time frames. The zones defined at the lower time frames, how strong they are. If they are very strong, they don't let the prices get up to this area. So that is what we are going to observe in our analysis. So now let's move on to weekly time frame. So we have a drop, base, rally is there, weekly zone. See the one? The first one. Already tested once. And weekly trend is uptrend, please observe. Monthly trend is also uptrend. Quarterly trend is also uptrend. So weekly trend is also uptrend. So this is the immediately available weekly zone. Leg-in is on 11 March 24. After that, one base candle. See, this is 11 March 24. After that, one base candle and then leg out candle. So let us draw a weekly demand zone. So this is the weekly demand zone. Let me mark the text. Okay. And the weekly demand zone is also having weekly EMA confluence. This is what you need to understand. And one more point you should observe. This weekly overextension is about to complete because prices entered into the weekly zone. That means they are about to complete. Overextension, weekly overextension. But how strong this weekly zone? Is it going to hold the prices? Or is it going to be violated and let the prices get up to this monthly zone? See, so many questions are arising, right? So we should get answers to all these questions. So we will get a fair idea only once we go to the lower time frame related zones. Lower time frames means below weekly zones. like daily 75 minutes or 15 minutes. Once we are going down, we get better clarity about the price movement. And like monthly zone, weekly zone is also a all-time high zone, demand zone. The reason is there are no supply zones. Weekly supply zone is not there. Even though there is a gap, that is not good enough to qualify as a leg out candle. Maybe a little lesser, that could be the reason. But remember, the week is not completed. We have 2 more trading days during this week, because today is only Wednesday. We have tomorrow Thursday and Friday, 2 more days are there. If this weekly candle further goes below, probably a weekly supply zone will be created. At this point of time, we cannot confirm. That is the point you people should understand. This is an ongoing weekly candle. It's not yet completed. Hope I made it clear to all you people. Okay, now weekly zone, demand zone. This is an all-time high demand zone as of today. If suppose if market goes further down in next 2 days, and if this candle is expanded and also some hidden gap, also some more body this will get, definitely this is going to be a strong drop candle. But as of now, it is not good enough. Even as of now, it is having enough body, still we cannot consider this as a zone. Maybe there is a possibility next 2 days prices again will go up. It may not be a valid leg out candle, that possibility. That is the reason why any monthly candle or weekly candle, until its completion, you cannot confirm that zone. But this is a completed zone, drop based rally. That's why this is valid. But this is ongoing candle, so you cannot conclude anything. This is a base candle or this is a rally candle. You cannot conclude anything. Or is a drop candle. You cannot conclude. So this is one important point everybody should observe. Okay, now let's move on to the next time frame, daily time frame. Let me generate the chain. Meanwhile, let me open the daily chart. Even I conducted a poll today at our Telegram group. I asked the people, visit a valid daily supply zone. This is the question I asked. Is it a drop-based drop? By the time when I am recording this video, whoever participated, majority of the people at the time of recording, majority of the people, I can say more than 80% of the people, they said this is a valid zone. Because I never know who are the actual participants. The majority of the participants they are learning the phase 1 training program. They are not yet completed. I don't know, they already completed phase 1 training or phase 2 training. And even I don't know those people who already completed the course and trading supply demand zone. And I don't know those people who already having good experience in supply demand zone participated in that poll. I don't have any clues. And even I don't want to point anyone also. Here my intention is how perfectly we are assessing these concepts, how you learn. Definitely, people who have not completed phase 1 training program, especially the lesson 9. Lesson 9 we have 4 videos. Out of those 4, in 2 videos, I have explained the concept of hidden body and hidden zones concepts. If you would have learned that concept properly, see here, this is the close of the candle. And this close is not closed by this candle. That means this candle gets hidden body. See here, it will be getting a hidden body. If it gets the hidden body, let me delete this to bring you clarity. If it gets the hidden body, the candle will be like this, a rally candle. From here, you add the body. So candle is going up, going up, going up, going up and going up, and finally candle closed here. See, now that means this entire candle is going to be a rally candle. It is not a base candle. We have a drop candle. We have a rally candle. Again we have a drop candle. Then where is the base candle? Just to tell you people, any rectangles are here? Let me, because I want to give you a better explanation. See here, there is a rectangle. Let me change the color to coordinates. Where is the color style? Yeah. Okay. Can I move this? The biggest problem with TradingView is it's not letting me. Okay, up to here let me draw. See, the candle will be like this. See here, you have a drop candle. Look into this candle. This is a rally candle. Next candle is again a drop candle. From it will get the hidden body. This drop candle, from here it will get even some more. This become a very big candle, explosive drop candle. So that means you have a rally candle, you have a drop candle, and then again you have a rally candle, and then again you have a drop candle. Where is the base candle? So without a base candle, you cannot create a zone. Actually, this is the original candle. That's why we are saying this is the hidden body. We have added hidden body. From the previous close of this candle till this candle, we have added the hidden body. The same concept I explained in lesson 9.3, if I am not wrong. Lesson 9.3, we discussed about hidden body. Lesson 9.4, we discussed about hidden zones. This is how you need to see. This should be your candle. This is how you are supposed to draw the candle. Your mind should understand this candle, or how your mind should visualize this candle. What we are seeing on the chart is like this. But what you have to see in your mind is like this. The candle should be like this. Hope you understand the difference, right? This is the dynamic way of looking into the charts. See, at the time of learning the initial sessions, like chapter 3, chapter 4 or 5, they are too early for you to discuss these advanced level concepts. So that is the reason why we haven't discussed any of these scenarios. We just learned without any understanding how to have the hidden body and all. But at some point of time, you should learn the concepts with more perfection. So that is the reason why in lesson 9.3 and lesson 9.4, I talked about such kind of zones. Maybe I may talk about these scenarios, all these scenarios in more detail in advanced sessions, the phase 3 at some point of time. But still I already gave you an overview about these zones, because I don't want you people to wait for a long period and make so many mistakes. That's why before getting into the practical sessions, during the practical session, lesson 9 is about practicals. So during the practicals, I explained about these scenarios. Those who would have land, definitely you might have thought this is a valid zone. But those who have learned this concept still forgot. Why you forgot? Not having enough practice about these scenarios. Still you might have thought this is a valid zone. But those who already practiced and seen multiple such kind of scenarios, even in one of our earlier discussions also, I talked about this. Previously also, at our Telegram channel, if I am not wrong, around within 2 months time period, or maybe 2 to 2.5 months time period, maybe somewhere in January or December time period, if I am not wrong. I asked such kind of question earlier. I don't know how many of you remembered. Same question, I think same Nifty chart only, in some other scenario, in the previous, maybe in December or January, I didn't remember exactly. I have asked this question in our channel. If you go through all the old posts I published, probably somewhere you will find this question. At that time I didn't conduct the poll. After that, in the HLQ analysis video, everyday HLQ analysis video, I addressed the same point. If you have any doubts, please refer one of the HLQ videos. I talked about this scenario. And today again we are discussing. Because the reason is sometimes we forget. Even you are an experienced person, sometimes you forget. So that is the reason why Nifty is not having any daily high liquidity supply zone. No supply zones for Nifty 50. But when you have such kind of scenarios, there are higher chances at lower time frame you will find the zones. At lower time frame. Probably in 125 minutes or 75 minutes, in this area, definitely you will find a zone. Many times, or majority of these times, I can say. That we will see once we get into the 125 and 75 minutes time frame. But at present, Nifty 50 is not having any daily supply zone. This is the point you should accept. So prices are moving down without a supply zone. Maybe lower time frame zones might be pushing the prices down. But you should also understand, compared to the higher time frame zone, lower time frame zones will be having less lifetime. That is the point you should understand. And also their reward will be till their opposing side zones only. See, if it is a daily zone, till the next daily zone, target will be there. If it is a 75-minute zone, the target will be next 75. Obviously, target will be reduced. You will get a trade, but your target might be less compared to the daily. So anyway, at present, daily is not having any supply zone. So look into our NeoStock report also. It is also did not identify any supply zone. There is no supply zone even as per the report also. So then what is the immediately available demand zone? So this is at 28,324. And there is one test is also happened from this zone. Already the zone is tested. So 28.3, and it is not a high liquidity zone, normal zone. But at least up to 75 minutes time frames or these normal zones also work if they have a proper order flow, fine-tuned order flow inside those zones. So anyway, let's draw this zone. This is the 22.3 after the two base candles. 22 March. This is the one, 22 March, two base candles and a rally candle. Even if you add the hidden body, software did not consider the length is not good enough to consider as a leg-out candle. So that's why, according to the software point of view, this is the demand zone, daily demand zone. So let me add the text. Remember, this is not a high liquidity demand zone, the normal daily demand zone. If it is having a fine-tuned 5-minute zone, probably we can plan a trade in that. And moreover, this daily demand zone is having a confluence with the weekly demand zone. That point you should not forget. So definitely it got some importance because of weekly confluence. What is the next daily demand zone? We have 12-2. After that, one base candle. So this is the one. Let me draw. Actually, this demand zone is having some importance. The reason is this entire weekly zone is initiated from this daily demand zone. So it is able to create a weekly zone from here. That means it has a strong order flow. That is the indication. Because the move is started from here. Weekly zone creation move is started from, see here, it previously tested and then a weekly zone is created. After that, prices moved up. That is the way this daily demand zone is having some importance. Even though this is not a high liquidity zone, maybe inside there could be lower time frame high liquidity zones might be there. That we have to see. And the last one we will drop to the third one. This is a high liquidity demand zone. This is only the available one. When it was created on 21st December after the 2 base candles. December. So this is the 21st behavior after the 2 base candles, but this is pierced, right? If I draw a zone, this is already pierced. See, let us check. Yeah, this is already pierced, so we cannot use this. This is no more valid. I'm sorry, I didn't look into this. This is a pierced zone. So no more valid. So let us limit our discussion up to this level. If these levels are violated, then we will see. Because at the time we should focus on this monthly level. If the monthly overextension completes, if prices enters here, or in between if there is any weekly zone, we need to look into that. But time being, let us limit our discussion up to this level. Okay, now let us change the time frame to the next one, that is 125 minutes time frame. Let me generate the chain. Meanwhile, let me change the chart also. Here we have 125 minute zones are there. Excellent. Supply zones. See, we have 2 supply zones. One is a normal supply zone and another one is a high liquidity supply zone at 125 minutes time frame. Where you thought there was a daily supply zone, actually you thought in that area, probably in that area there are 125 minutes and probably you may see 75 minute supply zones. So let me draw the supply zones. The first one is on 10-4, 9:15, 3 base candles. So when is a 10-4, 9:15? So this is the one, 10-4, 9:15. Why this is a rally candle? Sorry, actually this is not a drop candle, rally candle. At the hidden body. The moment you add the hidden body, prices are moving up, moving up, moving up, moving up. Maybe this could be whatever you are seeing body, that could be like a wick. That way you can understand. So definitely this will be a rally. Let us check how software recognized this. Yeah, this is RBD, rally based drop. But actually it is looking like a drop candle, right? That's why dynamic nature we have to understand. At the time of learning first phase of the training program, you won't see any dynamic natures. But lesson 9 you learned hidden bodies and hidden zones. At the time your understanding about the zones should change. So this is a small candle, that's why considered base candle. This is another base, this is another base. So total 3 base candles? Yes. So this is the way we have 125-minute zone. This is a supply zone. So this is a 125-minute supply zone. But below that we have again a high liquidity supply zone. Probably this could be the one. Drop, base, again a drop candle with hidden body. These are all hidden zones. Those people who are not aware of these hidden body concepts, they don't recognize these zones. They think this is a rally candle. But actually this is a drop candle. The moment you add a solid body it got from here to here. See, drop, base, drop. Let me check the date. It is 15-4, 9-15, 2 base. 15-4, 9-15, 2 base candles. Okay, this is a drop candle. Okay, these two are candles, base, again hidden body, drop, okay. But why this is not identified? What could be the reason? I don't know, I need to check. But this is also a valid supply zone. This is a drop. Definitely this is a drop candle. We have a hidden body. But I need to verify this. But let me draw. Because I know computer works based on the volatility conditions in the market. It identifies all the candles. So is it missed any of these candles? I need to check. But anyway, this is again a drop, 2 base candles. This is a medium size leg candle, so part of the base. This is a high liquidity zone. So 125 minutes, high liquidity supply zone. Oh yeah, I understood why it is not recognized as a supply zone. Let me delete this. Because the minimum, see here, computer might have considered this as a medium size leg candle, not the base candle, because the body is more than 50%. If the body is more than 50%, depending on the conditions, it will consider either as a base candle or a leg candle. Why leg candle? Why not leg candle always? Sometimes it may consider even base also, because this body might be definitely less than medium size candle. The body is less than the 75%. Definitely this body might be less than 75%. Maybe it could be 70% or maybe 65%, something like that. So that is the reason why what computer is doing, maybe it is having its own algorithm calculations, whether to consider this as a base candle, because body is definitely more than 50%, but less than 75%. So in between the conditions, the software based on different algorithm calculations, it will take a decision whether to consider this as a base candle or leg candle. So software considered this as a leg candle. That is the reason why we have a drop candle, we have a medium size leg candle, we have again a drop candle. That's why this is not recognized as a base candle. But we human, what we do, we have flexibility. But anyway, we don't know, because many times the computer identified zones works much perfect way, especially these kind of zones. And moreover, it is a high liquidity zone. So our focus should be on this zone. And the next demand zone, we have a 125 minutes immediate demand zone. Below we have a pierced. And this one is far away at present, these high liquidity zones. But remember all these zones. Before I record next video, if suppose market crashed, probably they may get support in any of these zones. If it doesn't, probably from this demand zone again it will move up. So first let us draw this zone. When it is 25th January 9:15, two base candles. 25th January. January. $9.15. Yeah, 25th January 9:15, these two considered base candles and a rally candle. So this is a 125 minutes demand zone. But here there could be some zones. Probably you may identify in 75 minutes time frame, because that is more relevant for us. So let me change the time frame to 75 minutes. And here also I am changing the time frame to 75 minutes. Actually, the main reason why I am looking into 125 minutes and 25 minutes is whether to check there are any good high liquidity zones. Otherwise, our concentration should be after daily 75 minutes, after 75 minutes, 15 minutes. That is the flow we are following. After 15 minutes, 5 minutes. Because that is a very successful combination. But why we should look into 125 and 15 minutes to find high liquidity zones? We don't want to miss them. Okay, this is a 75 minute zone, and observe here downtrend and previously daily sideways trend. I forgot to tell you that point. Let me move on to the daily time frame. See, daily we have a legging candle, and then we have a base candle. This is a ERC candle, base candle, and a rally candle. So this zone is violated here in this. So this is the way NIFTY daily trend is changed to sideways. If this daily demand zone is violated, now NIFTY will be changed to downtrend. So how this zone is going to hold the prices on the next, because tomorrow and the day after tomorrow's trading sessions are very critical. Do they have enough liquidity to hold the supply and again pushing the prices up? That we will be knowing tomorrow and day after tomorrow. So that is the reason why next 2 days tradings are very critical. If they can able to hold, probably prices will be moving in a narrow range for some period, in a sideways market some period. But how long it will move, we don't know. Okay, let me go to the 75 minutes time frame. So 75 minutes is a downtrend at present. That means short term or even swing level also 75. Swing daily time frame is sideways. The short term income trades will be changed to the downtrend, short term income trades. So in 75 minutes time frame, we have multiple supply zones. Only fifth one is a high liquidity supply zone. Let us look into that. So what are the immediate supply zones we have? First one, 10-4, 9-15, 4 base candles. This is the one. 10-4, 9-15, 4 base candles. 1, 2, 3, 4. So within 125 minutes area. So this is the one. The same only, but risk is changed. So this is 75 minutes supply zone, normal supply zone. And below that we have one more supply zone, that is 12-4, 9-15, 1 base candle. The same thing, 12-4, 9-15, 1 base candle, again a drop. That means the 75 minute supply zone is having two 75 minute zones. So another 75 minute supply zone. Both are LOTL zones. Please observe. This 75 minute supply zone, this 75 minute supply zone, both are overlapped with each other, and finally by combining both 75 minutes, it is formed as a 125 minute supply zone. So not much difference. For better clarity, you can delete this 125 minute zone. Now focus on the 75. Both are LOTL. If you combine both, it will become 125 minute supply zone. And below again you have one more. That is 12-4, 1 o'clock, after that 1 base candle. So this is the one leg candle, and then we have a base candle, then again drop candle. See, earlier the same area, 125 minutes is not considered by the software. But when it comes to 75, we identified a supply zone here. These are all normal supply zones. And below again one more supply zone, 15-4, 9-15, 3 base candles. So this is the 1 and 3 base candles, and then a drop candle, follow through candles. 15-4, 14-15. So this is a leg out candle. So this is the way software identified this zone. This has a 75 minute zone, but not a high liquidity zone. But 125 is a high liquidity zone. See, if we would have ignored 125 minutes, one high liquidity area we might have ignored here. 125 is a high liquidity. If you did not look into 125 minutes time frame, you might have drawn only 75 minute zone. This 75 minute zone would have been a normal zone. There is one more zone, 16-4, 9-15, 1 base candle. This is the one, 16-4, 9-15. This is a drop candle with hidden body. And here we have 1 base candle. And then again a drop candle. And now software considered this as a high liquidity 75 minute zone. Very interesting. Within the institutions created one high liquidity 75 minute supply zone exactly in the daily demand zone. Very interesting. So what will happen? Tomorrow is an interesting day. Is this high liquidity zone will be violated with a gap up tomorrow? We don't know. Or is it this high liquidity hold the prices tomorrow and push the market down? We don't know. Only tomorrow only we can tell. But at this point of time, market has provided a very interesting scenario here. If really the demand in this area is very strong, this 75-minute zone will be violated. That possibility is there. Or inside this demand zone, if there is any high liquidity 75-minute zones within this area, let us assume, then there is a fight between these two zones until one of them will be violated. If that is the case, market will be in a narrow range tomorrow. But we should be very careful when there is a tomorrow. Until market opens, don't place any pre-market orders, because here we have a high liquidity zone. We never know what will happen. There is a possibility with a gap up, the demand is very strong, with a gap up the zone will be violated. That possibility is there. If the demand is very, very strong, stronger than this high liquidity area. Or there is another possibility, this high liquidity area push the prices down and this entire daily demand zone might be violated and daily trend will be changed to downtrend. That possibility is also there. These are all the possibilities we are discussing. Or if there is any lower time frame high liquidity within this daily demand zone area and prices might be moving in a narrow range tomorrow. That possibility is also there. We have all the three possibilities. We don't have a clear picture. That's why I'm saying it is an interesting trading session tomorrow. See, until the market behavior completes, we never know. But at least we can able to see the critical levels so that we will be careful while preparing our trade plans. After that, we have a pierced demand zone. Already pierced means easily the orders will be going down, but below there could be pierced demand zone, below there could be, see, already it is tested only once and pierced at that time. Maybe there could be a high liquidity zone below pierced demand zone, but where is this pierced demand zone? This is on 27.3, 915, 4 base candles. This is the one rally, 1, 2, 3, 4 base candles here, just pierced. Just pierced means below that there could be some interesting order flow might be there, which has pushed the prices down. So maybe there could be a strong order flow below this. Let us observe whether what is that. See here, Monday also, not Monday, yesterday also, here prices did not let the prices go down. That means a very strong order flow. Let me draw a horizontal line here to get the clarity. Earlier, see here, below there is a strong order flow. See, yesterday also what happened? A very light, a little below only it moved. That means there is a very, very strong order flow here. So who is the reason? Is there any zone here? So let's go and see any zone here. Next demand zone, 26.3, 915, 4 base candles. 26.3, 915 here. We have, that means this demand. This is a normal demand zone only. But why it is working so strong? The reason could be, maybe there could be a reason, there is a very strong order flow, or maybe there could be a high liquidity zones in lower time frames within this area. That possibility also there. Sometimes software may not identify because certain checks are not completed to satisfy the software algorithm. But still the zone could be a high liquidity zone. That possibility is also there. Software point of view, it is not high liquidity. But anyway, how we are assessing based on the rejections. That's why rejection plays the very important role. So this is I need to change the color also. Sorry, this is 75 minutes. There is a daily zone. Where is the text I have added for 75 minutes? It's gone. So this 75 minutes currently having a very strong order flow because of these rejections. The blue color lines we have drawn, two blue color, let me delete now. Now we know who is the reason behind these rejections, this 75 minutes area. See, the first clue, rejection indicates this zone is having a strong order flow. And whoever took a trade yesterday exactly in this area, you might have got a very good intraday profit. This is the 22,082, 22,177. So close to 100 points move. So strong area. Now situation is clear. There is a fight between these two zones will take place. But how strong it is, this newly created supply zone. How it is going to hold the prices. Yesterday it didn't let the prices go beyond this. See, the supply zone holded the prices, it didn't go during the last hour of the market. So the possibility is price is going to move between these areas. This one will be violated and prices will move up. This 75 minutes demand zone will be violated and prices go down, and ultimately daily zone also will be violated and daily trend also will be changed to downtrend. We all should observe these points on Monday's session, on tomorrow's session. I'm sorry, tomorrow is not Monday. In tomorrow's session. Very interesting. Okay, now let's move on to the, let us see, there is any more demand zones below this. Eighth one, again we have a demand zone. That is 23,1030, 3 base candles. This is the one, 23,1030. We have 3 base candles. This is in the weekly zone. See, this 75 minutes demand zone is having daily confluence. Daily is having a weekly confluence. But if you look into this 75 minutes demand zone, this is not having a daily confluence. This is only an aggressive zone. If anybody planning for aggressive trades, such kind of zones, but proper reason should be there. And moreover, this zone is already tested. This is 75 minutes. Demand zone. Sorry. Is it tested? Yes, it is tested. See, we have a rally. After that, prices came down, picked up the orders and moved. Why it is picked up the orders from this zone? Maybe inside there could be a high liquidity zones might be there. That we will see once we move on to the lower time frames. So this is the last order flow, but it is already tested. But below that, any fresh high liquidity zones are there, we need to check. But remember, this 75 minutes demand zone is not a fine-tuned demand zone. This 75 is fine-tuned demand zone. So now let me change the time frame to the next one. Here also we have a zone below this, 14 to 11:45. to 11:45. Why I am drawing this? This is a fine-tuned zone. Inside daily demand zone, we have a fine-tuned demand zone. This is 75 minutes demand zone. To understand the strength of this, see, already prices previously picked up the order from here, and this entire 75 minute zone is created. This was the order flow earlier. Why this 75 minute zone was created? But here you have below, there is one more zone, that is a 24/1, 10:30. Okay, let's don't get into this further level. This is good enough. Let us limit our analysis to this area. Now next, let's move on to the next time frame, that is 25 minutes time frame. Changing the time frame to 25 minutes. Let me generate the chain. Meanwhile, here also we'll change the time frame. The 25-minute zones are ready. See, please look into all these zones, because I am not interested in all these zones. What I am interested is only high liquidity zones, and the fine tuning you have to do within these zones. Now from now onward, I will focus only on high liquidity. Sixth one is a high liquidity demand zone, where it is a 26.3, 14.15. And remaining zones you are seeing. You can draw on your charts. Here I will focus only on 6th and 7th items. We have two high liquidity zones. The first one is 26.3, 14.15, two base candles. So here, see these two base candles. This is a high liquidity zone. That was the reason why there is a strong order flow here. So this is a 25 minutes. Probably this could also be a 15-minute zone. Because many times we see 15 and 25 minutes zones will be identical many times. So here we have a high liquidity zone, the one that is holded the prices on our yesterday's trading. So here we have 25, but this is a fresh zone. Prices haven't entered into this level, but still the order flow is already spread into this entire area. The whatever the blue color line still available, entire area, the order flow is there. Let me delete this blue color line also. So strong rejections from here. Here also a strong rejections towards up. And we have one more high liquidity zone already tested once. This is on 23, 13.25, 4 base candles. Is it 23? Yeah. Why this zone is worked, even though it is not a fine-tuned zone. The 75-minute zone is not inside daily zone. Still it worked. The reason is the 25 minutes high liquidity zone. See, just touched the 25-minute zone, see the rejection. How strong it is. So that's it. Now let's move on to the 15 minutes time frame. Changing the time frame to 15 minutes. I will also change the time frame here to 15 minutes. Okay, 15 minutes is ready. See here in the 15 minutes we have a high liquidity supply zone. Already tested, but it is pierced now. Tested 3 times and the last time it is pierced, so we don't focus on this. So our concentration is on this high liquidity demand zone, created the most recently one. So when it is created on 26.3, 14.30, 3 base candles. So probably here only. See 26, 14.30, 3 base candles. So the same thing. The same thing is either 25 minutes high liquidity or 15 minutes high liquidity. That's why I told you. Many times you see both 25 and 15 minutes are identical. So this is the one currently holding. How powerful it is, we don't know. If it is really powerful, probably it won't let the prices go down below the daily. If this is violated, mostly daily zone also will be violated. If daily zone is violated, trend will be changed to the downtrend. Now all of a sudden all our trade setups will change. Now bearish trade setups will enable on daily time frame. So at the time, how you can plan your trades? You can keep daily as a ITF time frame, and then you can plan your trade setups. That way you can. See, in any time frame, if the trend is changed to downtrend, keep that as a ITF zone. This is a very important clue. Based on that, you can prepare your trade setups. Because the trend is down, so immediately push that particular zone to ITF level. Then below one time frame, consider that as your LTF, entry time frame. Above one zone is your anyway your income trade type. So that means your WIT trades will be enabled. The moment daily trend is changed, your WIT trades will be enabled. Enabled for bearish trade setups. And one more, seventh one is there. When it is, this is a 14-2, 2 base candles. Is this the one? 14-2, even below. Here. No. 14-2. Somewhere here we have next 15 minutes high liquidity zone is there. Let me draw. 14-2, 13-15. Yeah, here in this 75. This is again in this daily demand zone. We have a 75 minutes demand zone. In this 75 minutes demand zone, we have a high liquidity. 14-2, we have 2 base candles rally, and this is a high liquidity 15 minute zone. So 15 minutes high liquidity demand zone. Sorry, 15 minutes high liquidity demand zone is inside 75 minutes demand zone, which is inside the daily demand zone. And this is the one actually the reason behind the creation of this entire 75 minute zone. So here we have a fresh zone. This is a fresh zone. Probably in case if this daily zone is violated, next Nifty will get support in this zone. Even though trend will change, it will get a support. At least short term opportunities, trade opportunities, it will give you. Long opportunities, short term. Okay, this is about 15 minutes, and now let's move on to the last time frame, 5 minutes. Here also let me move. But one point we forgot to fine tune. Actually you have to do this, but anyway, this is very near to the zone. Let me check any. See here we have a drop, base, drop. This is 15 minute zone is there. I am trying to fine tune this zone. This is a 15 minutes normal demand zone. Fine tuning. How generally we do this. And inside this 15 minutes we should identify a 5 minutes zone. Let me check any 5 minute zone is available. The 15 minutes I have to draw wick to wick. I didn't do this. Yeah. This is the 15 minutes. We have a drop, base, drop. Within this 15 minutes, any 5 minutes. So this is the way you can draw. See, all these are all part of this order flow only, but okay, this could be supply zone. Have a drop, base, drop. And here also we have a rally, base, drop, but 15 minutes is not here in this area, right? So here we don't have any 15-minute structure here. Here drop, base, drop. So that's why the one that is there above the 5-minute zone, maybe we can't trust that much. Okay, this is just fine-tuned. Actually, this is the work you have to do, fine-tuning the zones. That is what I am expecting you people to build the skill. If you have that kind of skill, if you build this kind of skill, definitely you do wonders in your trading in the coming days. Because I want all you people to become independent traders. You should not depend on me. You should be in a position to analyze. Only thing to speed up your or to save your time, you take the help from the software. That is the only thing you will take. But remaining skills you have to build. Okay, now I am changing to the 5 minutes. The list is ready. Yes. This is the first high liquidity. This is another high liquidity supply zone. We have a third high liquidity supply zone. We have 3 high liquidity supply zones are there. What is the most recently available high liquidity supply zone in 5 minutes time frame? That is the 15-4, 15 minutes candle, 5 base candles. (15-4), 15. This is the one. Drop, 1, 2, 3, 4, 5 base candles, drop. This is a high liquidity supply zone. 5 minutes. If this 75 minutes high liquidity zone is violated, then probably here we may get some resistance. This is inside the 125 minutes high liquidity supply zone. Is there any 15-minute zone confluence here? Yes. We have a drop, single base candle, drop. This is a 15 minute. That means it is a fine-tuned zone in this 75 minutes area. Even 25 minutes also, see here. We have a drop, 25-minute zone, drop. Inside this is also 15 minutes. Inside this 15 minutes, we have this 5 minutes high liquidity zone. This 5 minutes zone is not only high liquidity zone, it is a fine-tuned 5-minute zone in 15 minutes. That 15 minutes is a fine-tuned in this 125-minute zone. The 125 minutes is a high liquidity supply zone. See here, this 125 minutes. This is a high liquidity supply zone. Got it? Well, and next, demand zone. Here we have 2 high liquidity zones. One is a low priority high liquidity demand zone and another one is high priority high liquidity demand zone. Both are fresh zones. Let us draw both. 27.3, 9.15, 1 base candle. 27.3. At 9.15. So this is the one. 21.73. 9.15, 1 base candle and a rally candle. 9:25 minutes candle. This is the one. This is a high liquidity, low priority demand zone. This is a 5-minute zone. This is a 5 minutes low priority high liquidity demand zone. So this is the immediately available, exactly from here, holding the prices. This is the one holded the prices. This is in the daily time frame, but this is not a having confluence with 75 minutes. This is working independently, but here we have a fine-tuned zone that we will check. Below we have 23, 15, 15 high liquidity zone. But can we draw? According to software, leg out is not good enough. But okay, you can draw. Why not? This is the way you can draw. This is the way you can draw another one. Maybe leg out is not great. Sometimes we can compromise and we can draw the zones. This is good enough. Because why software is not identified? I have given a huge target for the software. Identifying especially 15 minutes and 5 minutes. Software identifies only leg outs having high explosive. Many times. That way I fine-tuned the algorithm. But you can draw rally base rally. 26 March. But the one below is 20 March, 11:25. These are all normal 5-minute zones. We have fine-tuned zones. This is a fine-tuned by the human. We fine-tuned these two zones inside the 15 minutes high liquidity zone, because order flow should be there. Because we fine-tuned, I have used the word fine-tuned. But according to the computer's point of view, the next high liquidity zone is 23, 11:25. This is the high liquidity. This is acting as a bear trap. Recent time we've been discussing quite frequently these traps. See, this entire daily zone, 75-minute zone, if everything is violated, this is going to be a bear trap. This is a 5 minutes high liquidity demand zone. This 5 minutes high liquidity demand zone will act as a bear trap for this entire 75-minute zone. Daily zone. This is not daily, 75-minute zone. This is a 75-minute zone. 25 minutes and 15 minutes are high liquidity here. Are there any fine-tuned order flows here? You can draw a zone like this. This is a fine-tuned. Because manually we are fine-tuning. See the price action clue. Prices came near to this, but it moved up. So definitely strong order flow here. So in this zone we have a fine-tuned zone, below we have a bear trap. This everything is inside the weekly zones, inside the weekly demand zone. That means institutions already set some traps and order flows. They are already ready. So that means how strong our weekly zone is going to hold. There is an indications are here. That means it's not easy to violate this weekly demand zone. So probably bears has to be stopped somewhere within this area, either in this zone, if not here below this. They already set ready. They are waiting. Bears are waiting to trap the bulls are waiting to trap the bears in this area. So bulls prepared all their plans and they are waiting to capture the bear somewhere in this area. But before that, how strong this is? This order, fine-tuned order flow we need to understand. There are so many things we have fine-tuned here. So remember all these order flows, the critical things. So this is the immediately available and this is the fine-tuned 5 minutes demand zone. Two zones are here. And here we have a high liquidity area, 25 minutes level. This daily zone is having confluence with weekly. Similarly, inside 75 minutes zone is having confluence with daily. Again, inside 75, we have a 5 minutes zone confluence with 75 minutes. And again, within the 15, we have two fine-tuned 5 minutes demand zones. So this daily demand zone is looking strong at this point of time. How strong it is going to be, we will see tomorrow and day after tomorrow, depending on these bears. Because bears came very close to the demand zone. Previously also we have seen such kind of scenario. Bears came very close to the demand zone. They entered. Last week it happened. We thought probably the zone will be violated. But institutions, they set everything, they prepared, and again they pushed the prices from here. This was the price action we have seen earlier. Now again prices entered into this area. Now what is going to happen? Again, like what happened earlier, same way prices will go up and get a new all-time high. Or this time bears will again push and break this zone that we need to wait. So very interesting. Now finally we will see the trading ranges. The first range is between this 75 minutes high liquidity zone and inside this daily 75 minutes high liquidity zone. Probably the ranges will be like this. Where is the info line? Okay. The ranges will be like this. This could be the range. Probably prices may move between this range. If this is violated, maybe the range will be changed to like this. Here I am assuming this daily demand zone is holding the prices. If daily demand zone holds, the entire analysis will change. The reason is now daily trend will be changed to the downtrend. When daily trend changes to the downtrend, all the short trades will be enabled for short-term income. Your daily can be intermediate time frame. Your WIT trades will be enabled. Already your 75 minutes trend is a downtrend. That means short-term trades are already, your DIT trades or probably your hourly income trades, they are all short trades already enabled. But this week this is very critical. So this is about the support and resistance levels for Nifty 50 for tomorrow and day after tomorrow. And based on tomorrow and day after tomorrow's price action, we can see how the price action will continue from here. So let's take a break here and continue from here in our next video. Thank you.